Great, let's get started. Good afternoon, everyone. And my name is Aliza, sir. I am the Director of Financial Security for the AARP Foundation, and I want to thank the Financial Health Network for hosting us for this webinar today, Retirement Realities, Innovating to Support Aging Americans on Fixed Incomes. I think we all know what an important and timely conversation this is, and I hope that the panelists that we've brought in to talk with you this afternoon are going to be able to spark some ideas, some innovation and additional work that we can all be doing together to address the challenges that we know many older Americans are facing. Before we get started, want to mention that you are going to be muted throughout the length of the presentation today. However, if you have questions, please put them in the chat box on your window. We are going to be going through those questions. I'll kick off the panel today by introducing our panelists, talking about the work that we have been doing, and fielding some questions, and then we will make sure to reserve special time at the end of the session today for Q&A. We want to hear from you. We want to hear from what you're wrestling with, and I know that the experts that we have on the panel today are going to be able to offer important insight and feedback as well. Before we jump in, I want to introduce my panelists. Like I said, my name is Aliza Sir. I'm the Director of Financial Security for the AARP Foundation. We are the charitable affiliate of the AARP, and I am thrilled to be sponsoring this work in collaboration with Chase that the Financial Health Network has led. I'm also joined by Michael Billnitzer, who's the Executive Director of ESOP Cleveland and the Vice President of BRIA. Mike Burshteyn, who is a Senior Associate with Idea42. Matthew Cooper, the CEO and co-founder of EarnUp, and Heather Holmes, the founder and CEO of Genivity. So as you will see, we have a wide array of perspectives today: philanthropy, fintech, nonprofit, and I think you'll find that we have a robust conversation and are able to bring all of those perspectives together. So why are we here and having this conversation? Before I dig into the realities that are facing low-income older Americans, we wanted to show you a short video that tees up the 6-part video series that we sponsored in collaboration with Chase and the Financial Health Network. This was work that we've been doing together over the course of nearly a year. We had individuals and their families invite us into their homes and generously share what it means to them to grow older in America today and how that intersects with their financial lives. And this 6-part series digs into 6 key themes that emerged through that work. And our conversation today is really going to focus on that first theme of living on a fixed income and the challenges that it faces. So before we jump into the conversation, here is a glimpse into the series, and I hope that if you have not already, you'll have a chance to view more of the episodes after today as well.
Right now it's trying to get by with just my annuity from the post office. They take out my health insurance out of my annuity. They take out my life insurance out of my annuity. So then my annuity might start out big, but right now, they're lucky if you come out even or even behind a little bit.
As soon as I get on disability, I just have to budget myself. Every time I get a raise, my rent go up. So if we get a raise in January, I think, that ought to be about $3. So my rent probably go up $3.
I was not taught to save money. And now I'm still substitute teaching, but I'm tired of it.
I've been working since I was 16 years old. You know, when you pass, you're gonna at least have bills coming in the mail. I'm just trying to limit mine.
What I we'll share at the end, we will make sure that everybody has access to the website where you can go and view each of the videos, and I encourage you to do so. Like I said, the stories that these individuals and their families shared with us and the enrichment of that is incredibly impactful. So the reason that we embarked on this work, I think it is surprising for many to hear that there are 56 million low to moderate income people over 50 in the United States today, and they're facing a variety of challenges. And that means that they really are struggling with one or more of the key components of our financial lives: having enough money to cover our expenses, being able to feel that we have a manageable debt load, and being able to plan for the future. There are also 25 million Americans over 60 living on less than $29,000 a year. 45% of elderly singles and 21% of elderly couples are relying on Social Security for at least 90% of their income. And when we say that, it is even more impactful when we understand what that looks like in a family. So that translates to an average about $1,500 a month that people are using to scrape by. And of course, we know that all of this disproportionately impacts Black and Latino households and Black and Latino seniors in our country. One of the participants in this research, Verner, she's 74 years old, an African-American woman, and she shared with us, people don't believe you when you tell them that you're poor. And I don't say it anymore because it just feels like nobody really cares. And the result of that, and what we're going to dig into in the conversation today, is that people are being faced with unmanageable credit card debt, impossible choices about cost cutting. They're finding ways to form intergenerational households to save on costs, to support people in the home. And then also, we'll dig into this more next week if you're able to join our follow-up discussion, but they're dealing with poor health due to the intersections that we know exist between financial health and medical. So in order to kick things off, I would like to now have invite each of our panelists to share a bit more. So we know that the kind of security that individuals used to anticipate upon reaching retirement age is virtually non-existent, and especially for those in lower wage work, what we're seeing is that this is starkly different through the COVID-19 pandemic. Each of our panelists today is leading innovative solutions to address these challenges. So kicking off with Michael Billnitzer from ESOP Cleveland, can you please briefly introduce yourself, your organization, and tell us how you are working to address specific financial challenges that older adults are facing as they look ahead both towards retirement and also just managing living on a fixed income.
I would be glad to. Thank you so much for the introduction. Again, my name is Mike Billnitzer. I'm the Executive Director of Empowering and Strengthening Ohio's People, or ESOP for short. And ESOP is a subsidiary of the Benjamin Rose Institute on Aging. ESOP's mission is to help adults in all stages of life achieve and maintain financial wellness and housing stability. So we're dealing with the housing and financial piece that older adults face and that Aliza was talking about, have to contend with the challenges related to those every day. And to us, they're inextricably related. Our parent organization, the Benjamin Rose Institute on Aging, addresses things like behavioral health and basic needs and social isolation and research. So combined, we try to holistically advance support for older adults, which is the mission of the Benjamin Rose Institute on Aging. So ways that we have innovated, just to give you some background information, ESOP was the state's largest foreclosure prevention agency during the height of the housing crisis and Great Recession. And when it started to wane, we looked at our numbers and we had helped over 55,000 families avoid foreclosure in Ohio. And one of the things that we realized is that 40% of the people that we helped avoid foreclosure were our client were 55 and older. Our clients were 40% of our clients were 55 and older at a time in their lives when they should not be thinking about their mortgage or thinking about owning their own home. They're underwater and indentured servants to their mortgage. So we took a look at those numbers and decided we needed to do something for financial stability for older adults. We held listening tables with older adults, and from that we created a suite of services called the Senior Financial Empowerment Initiative, whose objective is to try to be preventive and provide around financial and housing issues, but provide financial capability. And this is a Prosperity Now definition of knowledge is great, but knowledge alone doesn't work by itself. And I think you're going to hear my colleagues talk on the call today about that a little bit more. But if you give someone knowledge, skills, and access to resources, you put those three together, you're now making them capable. So a couple things that we do in Northeast Ohio as part of our Senior Financial Empowerment Initiative, we do financial education workshops at community-based organizations where we go in and we teach a series of modules around financial issues and housing issues that impact the lives of older adults, like how to avoid financial fraud and scams, how to deal with legal and end-of-life issues, how to understand a credit report. And as we do that, we build trust with older adults, and they come into us for one-on-one financial coaching. And so now we're giving them the skills, we're helping them on a one-to-one basis. And we can also give them access to resources. So there are a lot of older adults who qualify for benefits entitlements that they just didn't know they qualified for and can recoup dollars. So that whole model, and we have an array of services that make up supportive services that make up our Senior Financial Empowerment Initiative. In terms of innovation, we think that model alone is innovative, but I'll just quickly touch on two. In response to COVID-19, as we are all feeling the effects of that, one of the things that we've just created is a zero interest senior small dollar loan product. And the zero interest is important there. And it's meant to address an issue that an older adult is facing as the direct result of COVID-19. It's a loan between $300 and $1,000, and it's coupled with financial counseling. And so if an older adult has an issue, they're unemployed, underemployed, utilities, transportation issues, medicine or healthcare, basic needs, we can give them a short-term loan, but the goal is to get them into financial counseling to help them become financially capable and help them sustain the income that they have. The bigger, I think, challenge with that, or the bigger objective with that, is that in a time like this, in a crisis like COVID-19, we don't want older adults turning to payday lending, where now it becomes a vicious cycle and that indebtedness just perpetuates. So that's, in fact, I'm just going to stop on that one because I think that's enough, but that gives you an idea of who we are, what we do, our approach, and how we try to respond with innovation. Thank you.
Thank you, Mike. I want to jump in and dig into so much of what you shared. And I think I'm actually going to ask Matthew if you can introduce yourself next, because both of you have come at this work from a point of addressing housing insecurity and wealth building, but from very different approaches.
Yeah, no, thank you very much, Aliza, and everyone who's joining us today for this important topic. I am the co-founder and CEO at EarnUp, and EarnUp is a financial technology platform that is focused on helping Americans improve their financial lives and get out of debt. And we've been doing that for a number of years. We help Americans manage over $10 billion in loans in any given month. And one of the ways that we achieve kind of scale to impact as many customers as possible is we partner with financial institutions, mostly of all sizes, both credit unions, banks, and lenders, to kind of deliver financial health tools and services through them to their borrowers and their consumers. So, we both operate with people that have loans today, as well as people, for example, first-time home buyers that are trying to improve their financial lives and move towards, home ownership for the first time. And we have a very diverse group of customers that we serve today. Looking at the recent stats on our side is that about 70% of the people using our platform are over 50 and about 20% are over 65. So, a large portion of the consumers that we're finding resonating with these automated and technical solutions are sort of people both age and location and race, sort of very diverse, which is exciting to us and is definitely a focus for trying to be in environments like this to learn more.
Thank you, Matthew, and we're looking forward to learning a little bit more about that. I think there's a preconceived notion that older adults do not use technology or don't use fintech specifically. We actually released a report earlier this summer with the Financial Health Network on how innovators can design their tools and technology to increase adoption in this demographic. And EarnUp's been really successful by finding that value that older adults are looking for. Mike, at Ideas42, so much of your work is revolved around this design element and enhancing value as you deliver it to end users. Can you tell us a little bit more about the organization and your work?
Sure, happy to. It's really great to be on the panel with everyone today. So my name is Mike Burshteyn. I'm a senior associate at Ideas42, based out in Oakland, California. And Ideas42 is a nonprofit research and design consultancy that uses behavioral science to tackle social problems in a really wide range of sectors, ranging from consumer finance to health to economic justice, sustainability, really anything where there's human behavior involved, which is to say most things. And we do this work with nonprofits, foundations, governments, public institutions, and value-aligned for-profits. And the common thread is really understanding and leveraging the huge influence of our context on our psychology, on our decision-making, and on our behavior. And so when I say context, what I mean is really a large number of things, ranging from our physical and digital environment to culture, to what we see others doing, how choices are presented to us, the design of digital systems, even the degree of poverty we experience. All these things really have an outsized impact on how we think and what we do. And so with our work, we spend a lot of time figuring out not how to change people, but on how to change the context in order to influence people's behaviors. And so as we apply this to older adults and think about the challenges that older adults face, we, I think, need to consider the context of aging and literally the thousands of decisions and actions made by older adults, their younger selves, their friends and families, healthcare providers, policymakers, et cetera, that contribute to creating the conditions for people to age well. And so I think people, tend to start with retirement savings, and we've done a lot of work, and behavioral sciences had a lot to say about nudging people to increase their retirement savings, and that work's important, but unfortunately, if you don't have enough money to pay your electric bill, no amount of clever design is going to help you save enough to have a comfortable retirement. So, this work, the work that we do, really requires a broader view, thinking about not only how do we help people manage their finances, but how can we help increase incomes and reduce costs. So some of the work that we do focuses upstream on older adults when they're a bit younger. So we have a project around workforce development programs where we're conducting research around how working adults decide to take advantage of workforce development programs, where they get off track, and how we could design those programs to ensure greater success. We know that women over the age of 65, especially women of color, are much more likely to live in poverty than men. So we're doing some work around the gender wage gap and understanding the behavioral drivers within the workplace that contribute to that. And then on the topic of reducing costs, the obvious place to start is around people's health. Medical debt is the number one source of personal bankruptcy in the country. And so we've done a lot of work around medication adherence, helping to reduce prediabetes, reducing inappropriate prescriptions. And really, I think we've just started to scratch the surface of the myriad behaviors and decisions that go into creating this ecosystem. And I'm really excited about the possibilities here.
Thank you. So you're not busy at all in your work, it sounds like. You mentioned health, and it's a great segue to Heather, the incredible work that you have built through Genivity that is truly at the core of this health wealth connection. Can you tell us a bit more about your work?
Yeah, and thanks, Mike. I felt like that was a good cue up for what we're doing. So yeah, I'm Heather, the CEO and founder of Genivity. Genivity stands for Generations and Longevity. And what we're really trying to do is to help solve the problem of healthcare costs are the #1 cause of bankruptcy and retirement, but can really just decimate an individual or a family's financial security at any life stage. And so what we do is we work with financial institutions and financial planners to help people and consumers better understand that intersection from a personal perspective. So we help them understand how their current health status, their lifestyle, their unique family history, all these things factoring together, and what does that mean for their future longevity, future health needs, future elder care needs. And what are those related costs at each milestone along the way? I think one of the really important things that we do with this is it's a fully digital experience for that end client or consumer. And what we show them is if there's anything from a behavioral perspective that they could take control of today that can really help them optimize longevity and health and reduce costs, we show them how that happens. And you'd be surprised at how motivational that can be for people. When they actually see how something might be really expensive down the road, but by making some simple changes today, it can make an impact.
Thank you. And I look forward to hearing more of the specific stories that you're able to share with us, Heather, about what that has looked like actually in terms of the change in outcomes for some of your customers. Before we dig into that, I want to go back because to a point that a couple of you brought up, because the intention behind this series is to encourage innovators to really center human experiences and stories. And while we think that we are doing that, the reality is that particularly, I think often for nonprofits and philanthropy, it's difficult because there are so many stakeholders involved. And whether it is in fintech or nonprofit philanthropy or business, how do we take user-driven insights to shape and change the way that we deliver a product or service? Mike, maybe you can jump in and talk about how Idea42 influences your clients in this work.
Yeah, gladly. So yeah, I mean, starting with the stories in the video series, they're all incredibly powerful and really great examples of how just hearing people tell their own stories can help build empathy. It makes me miss being able to go out and actually conduct field research and talk to people face to face. And empathy has certainly become a buzzword in human-centered design for good reason. It's really important. But I think we tend to think of empathy slightly differently when we apply it to our work, because what we're trying to achieve is an understanding of people's decision-making process and why people are doing the things they're doing so we could design better solutions. And so, of course, as individuals, we try to understand ourselves and other people every single day. We're kind of hardwired to be causal inference machines where we're, looking at a complex world and trying to create narratives that help us understand it and help us understand ourselves. The challenge is that a lot of our decision-making and behavior is really subconscious. And as I mentioned earlier, heavily influenced by our context in ways that can be really hard to see. And so what this means is, we're very ready to tell stories about why we're doing the things that we're doing, but oftentimes those stories may not paint the full picture. So an example is, if I was to go up to someone at the grocery store who wasn't wearing a face mask, fortunately in the Oakland people have been pretty good, but if I was to ask them, why aren't you wearing a face mask, they might won't ignore me, but if they were to answer me, they might give me one explanation, but I can almost guarantee you that that explanation won't be that, the fact that we're not wearing a mask is deeply tied to their political identity, and that wearing one would create cognitive dissonance, which we're really hardwired to avoid. By the way, I'm not suggesting that that's the only explanation for why people don't wear masks, but just that merging empathy with science and a behavioral science framework gives us a slightly different perspective to interpret the things that we hear people say, and also makes us think about what are the questions that we're actually asking people. So for us, instead of asking why questions, we ask a lot of what questions to understand what people are doing, to understand their context, and use the academic research in the behavioral sciences to interpret that. So it might sound like a bit of an oxymoron, but I guess you could call it kind of scientific empathy.
Yeah, I think that example and that distinction between how and what is really important, and it's critical. Michael, so you are seeing this real time as people are coming in the door and coming into the workshops that you offer. Can you talk a little bit more about how this is showing up and how this is centering the experiences of your clients has changed the decisions that you're making? You gave the example of the zero interest loan that you're offering. How do you make those decisions about the types of products and services that you're going to offer? Excuse me.
So I think it really results when we design a new program. It's the result of listening to the voice of the community and what's emerging, not just reactively, because a lot of our clients will come to us reactively, but proactively. And I love Mike's point about not asking why questions, because that can put people back. It's how and what do you need? Those were some of the questions that some of the words that we used when we held listening tables with older adults before we built our senior financial empowerment initiative, to understand what, if they could change one thing about their lives in the community, what would it be? And it would be, they told us, to age in place with greater economic stability or greater financial stability. The other thing that I think is important is the frontline staff in a nonprofit in our model. I mean, it's just, they have to be able to, I'll start with them and say they have to be able to listen to understand first, and really listen to understand what the issue is, and also sometimes diagnose to what the root cause issue. What presents often is not really the root cause, but listen to be able to move forward from there. So the other thing I would share is in terms of empathy, we are very big on sharing client success stories with stakeholders, with funders, with our parent organization, with colleagues and cohorts of clients that come in, because it shows what's possible. There's a program I haven't talked about of ESOPs that's called Leap Match Savings, but it's we do a graduation for people that enroll in this program, and to sit and listen to them share the successes and see the excitement of when they have managed to save, put away personally up to $500, and then get it matched, and attending the other components, workshops and one-on-one coaching at the end of a year when we have a client that has makes $15,000 a year and no emergency savings, and at the end of that year, they're now financially capable and they have $1,050 in the bank. To see that pride, that's behavioral change, and it's contagious. So that's what we see, Aliza, on the ground, and how we try to share peer successes, both with peers and with decision makers.
Yeah, I can only imagine how meaningful those experiences are at the end of that program. And Heather, I know that in your work, you really center personalization and knowing who the end user, the client is. Can you talk about that a bit?
Yeah, I think what we see with people trying to make decisions as it relates to their finances with their health is that it's really easy to just think it's never going to happen to me. I'm gonna I'm gonna live forever and die in my sleep. I'm never gonna need, I'm gonna be healthy and I'm never gonna slow down and need any kind of care. Or, sometimes it's the opposite side where somebody's convinced that they're gonna die really, really young, and so they don't need to save. And so it's just this kind of disconnect between what they think and really trying to understand. And what we find is that by taking people and taking them through a guided experience around themselves and then matching them to people just like them, as personalized as possible, and then showing them what that average person looks like. So showing them what that average African-American woman, what her scenario looks like, but then showing what the personalized African-American woman with a family history of heart disease and who doesn't like to exercise, showing her what that looks like makes a big difference, because all of a sudden it kind of removes that wool from your eyes and it shows you that these are really real scenarios. And you can always say, I want to go with the average. We'll show you both. But once you see it that way, it just becomes a lot more real. And what we hear consistently back is that it removes that inertia because all of a sudden it hits home. And a lot of times people are working with couples with our software, and that's an even more interesting behavioral dynamic, because oftentimes one might be a little bit more either financially savvy than the other, but the other one tends to be more on the health spending savvy side. So it's going to be an interesting way to see them come together that way, but also an interesting way to see what kind of impact you can have on the spouse when maybe you're concerned about their life expectancy or their health, when you see what that means to them. So we find that that's really the key. And what shocked us in the financial services space was that there was no personalization for planning for how long are you going to live, no personalization for planning for healthcare costs, no personalization for planning for elder care. Oftentimes you're just left as big blank spaces in a planning software. And as Mike and I both said, these are the top causes of bankruptcy. That's inexcusable. And so what we're here to do is become the standard of care in the financial services space around how do you create personalization for longevity, health, and elder care.
That's right. And I think any of us have experienced that lack of personalization that we face in so many of the financial services that are introduced. You and Mike both mentioned bankruptcy, you're talking about wealth, and I think we can't talk about the wealth gap in America without also acknowledging the racial wealth gap and the historic injustices, of course, that really breed the present suffering that is shaking the nation and that we are wrestling with. The COVID-19 pandemic, of course, has made these economic and systemic barriers that are responsible for these inequities even more visible. And I know that in all of our work, we are addressing this, and the tension between economic stability, racial inequity are so interconnected. Matthew, can you talk about how that shows up? You mentioned just the background that many of your clients are coming to you from, of needing to find a way to take control of their finances so that they can build towards some longer term financial security and wealth building. How is your team at EarnUp talking about the issues that are facing particularly Black and Latino communities right now?
Yeah, no, thank you for that. So I think there's kind of three ways that we're tackling that. I'll just touch them quickly. I think one is around home ownership. So, statistically, if you look at the way wealth has been built in this nation, the last, especially the last 100 to 150 years, like a large portion of that has been the appreciation of property over time. And racial minorities were explicitly and now structurally still sort of limited from access to that. And so in a lot of ways that, again, were perhaps more explicit in the past, but that legacy lives on, and there's still a lot of data that suggests those challenges of access are present today. So with one of our products, which is our move-in solutions product, which we work with groups of lenders on, it's like, how do you help people get into homes for the first time? And a big piece of that targeting in these communities that we're talking about, sort of people of color and lower income communities, is that in these sort of communities that are more diverse, what we see is that when it comes to home ownership, they rely significantly more on interpersonal relationships and referrals, because they're just, for a variety of reasons, but one of those is that there generally is a lack of brick and mortar resources available. Banks, loan officers, brokers are much less likely to be in those communities. So as we're been rolling this product out over the last year, really especially the last few months, we've been trying to partner with institutions right now, specifically in the Southeast, banks and credit unions that do have physical presence in these communities. So again, trying to get technology and education communities through sort of the existing networks that do exist, is one way, that we're trying to tackle it, which is a distribution question, which is just assuming we can't just sort of put it on the web. That might not be enough. We need to have some word of mouth or some sort of interpersonal connectivity that helps distribute these solutions so that they can help the right people. That would be sort of one area that we are spending time. The second is maybe more obvious, but to dealing with kind of communities of color, which in this country are significantly more likely to be paycheck to paycheck sort of consumers statistically. Our basic product, when you have loans, which is like our get ahead product, really is around syncing income with expenses, so sort of automating budgeting. And it sounds very obvious, but especially for people who are sort of in or entering retirement on fixed incomes, which is the focus for today, the ability to have all of your major expenses and liabilities sort of a portion of those come out on whatever dates you plan, your money is coming in, helps people sort of budget it in an automated way. So I, as a consumer, know if I have, let's say me and my spouse have Social Security coming in, I can know that a portion of my car loan or my mortgage or my rent, or whatever it is coming out on those dates, and what's left in my bank account truly is something I can spend, more discretionary sort of spend. So that is something also that is not specifically, let's say, targeted at a specific racial profile, but we see overwhelmingly overlaps with communities of color that fall in that paycheck to paycheck sort of zone. And the last one I'll just mention is that with this crisis, which has hit these communities both health-wise and economically, people of color significantly harder than other communities in the US. We have partnered with a number of different groups, but one of them to support our borrowers in those communities, but one of them is Acumen America, where we have actually collaborated, and we'll do more formal press around this later, but we have kind of combined where we're taking grant dollars from them and giving them away to sort of the highest risk communities, people in the highest risk communities that are using the EarnUp product. So in this case, sort of grant-based sort of cash distribution, but again, really focused on who's been hit hardest, and the people of color in this country overwhelmingly are the ones that show up, as being the most effective. I don't know if we lost Aliza there.
That's a new one.
Yeah, I'll just say while we're getting our moderator back, that we are always looking for new banks and lenders who are passionate about both first-time home buyers and helping improve the financial lives of the borrowers that they have, that are willing to go that extra mile and look for new ways to support. We love to have those discussions and look for ways we can do that together. So we welcome that opportunity.
I have a question for Mike while we're waiting. I'm just really curious, with all the behavioral research, what's been the most shocking thing that the most shocking thing, or maybe the biggest myth that has come out of it?
That's a good question, actually. We're setting each other up very nicely today. I was actually going to volunteer this information. It's related to the question around economic inequalities and the work that we've done around the narratives around poverty. I think many people have been conditioned to believe in very harmful and inaccurate narratives around poverty, that it's a personal failure and that people living in poverty simply don't want to work or just want to, take advantage of social safety net programs. And so as a result, we need to put in really stringent controls in place. Hey, Aliza, welcome back.
You went exactly where I wanted you to go, so you're running with it. I apologize.
Yeah, no worries. We took over for you.
Thank you.
So not only are those narratives empirically false and harmful, as I hope everyone understands, but the less obvious point here is actually how the context of poverty shapes us and what that means for really any kind of programs aimed to alleviate it. So living in poverty actually means living in chronic scarcity, and that means having to make constant, difficult decisions all the time about how to stretch every penny, how to manage those volatile and misaligned cash flows, whether or not you should be paying your heating bill or pay for your groceries. And so apart from just being immensely stressful, this scarcity actually captures our minds. It uses a ton of our cognitive bandwidth, and it makes it much more difficult to do other things like think about the future, process information, evaluate options, exert self-control. So an analogy is that, if you're going away somewhere and you're packing a suitcase, which at this point hopefully isn't too dated of a reference, but if you're packing a suitcase and you have a really big suitcase, you don't really need to think about what to put in it. You could kind of pack without a lot of thought. You just throw stuff in the suitcase, take whatever you want. If you have a really small suitcase, every item that you put into that suitcase involves a trade-off of something else that you can't pack, making the packing process much more difficult. So it's really important to note that a lot of what I'm describing isn't anything innate about people who happen to have lower incomes, but it's actually a feature of living in poverty that shapes us. And so those insights are a fundamental part of everything that we do, and how we think about, literally all the work we do in aging and beyond.
Thank you, Matthew, again I heard what you were sharing before I froze up and got lost there, and Mike for jumping in. Before we transition we're starting to get some great questions from our audience today. Before I transition to those, any additional points that any of our panelists would like to make on this conversation that we're having specifically, and then also, as we look to think about how do you know that the work that you're doing in this space is successful? What are really, when we know that the impact of so much of our work we may not see until 5 years, 10 years, 25 years down the line, are there early indicators that you're starting to see that tell you that we're moving in the right direction?
I'd be happy to go. And so for us, we are, our customers are the financial service providers. We work specifically with financial planners, so it's a little bit different of an income level. We're working to expand to be able to offer things to a broader service group. But I think a couple just really impactful stories. One was really recently with one of our customers. They called us because they had a couple who was coming in who had previously had a long-term care policy, and a long-term care policy can be good for people, but sometimes maybe it doesn't make sense. And that's one of the trickiest things to really understand is your need potential for that, and it can be incredibly expensive for people if that's something they don't really need. So anyways, this couple came in. The insurance company was going to raise their rates, and they were really concerned about what did that mean to their budget and to everything else that they had in place with their plan. But they were terrified of losing some of the benefits of this because of what could potentially happen. And so our customer took both the husband and the wife through our Halo product, and then really analyzed the results. And what it showed was that this couple was incredibly healthy, active, and what our projections were showing a much lower risk and amount of need for that product. So what they were able to do was to then go and push back at the insurance company about that rate increase, and also help the clients feel more comfortable that they were making a data-driven decision versus an emotional decision. Another quick one I'll tell you also involved a couple, and the woman had not been as involved in the financial decision making, which unfortunately is still kind of a higher trend, though it's changing. The husband was making all the decisions. And what happened in this case was he wasn't very healthy and he didn't really have this great of an outlook, but he would not move on making any decisions to help make sure she was going to be okay when he was gone. And so and the advisor put him through the Halo scenario, and it showed the realities. The wife was there to see that, and that motivated her to want to come to the meeting and understand what was going on with the finances and get on her husband's case about some of the potential changes that maybe he could make today. And it motivated the husband to realize that he needed to take steps now to make a difference, to make sure that when he was gone, she would be okay. And that's exactly the kind of changes that we like to see people making today that will, you know, pay off in the long run for them in the future.
Yeah, just jump in, Aliza, for a second, just building on Heather.
Please go ahead.
So I want to make sure we get to the questions from the audience, but I do think that one of the ways that we think about sort of behavioral design in these contexts is like, if we get a customer to opt into a positive behavior, for example, using the EarnUp Get Ahead product, is the customer signing up to make an extra $10 a week towards their auto payment? One of the stats we would look at is how likely are they to keep doing that, right? I mean, just very basically, it's like compared to the rest of the world, if we get somebody to opt in and then default into like a better action, then what is the statistical probability that they will stop taking that action in the future? And in general, we're very encouraged. You know, defaults and recurring action, automated actions can be incredibly powerful for better or for worse. In this case, we try to harness that for better. So that would be kind of one area that I think that we look at, which is just like to what is the amount of positive outcomes that we can automate, right? And then for a customer, and how likely are they to keep going? And in general, we've been very impressed with that, but we always have to look at ways to do that better. The other is definitely an age distribution question. So like, how diverse are the customers really? We mentioned earlier that a lot of customers using EarnUp are over 50 and over 65, but that's like a constant sort of obsession of kind of diversification, right? Of like, how do we make sure those people are being included? And there are certain parts of our product that are much less likely to be used by those older demographics. Not like the whole suite of it, but pieces of it. And so those are questions we look at also just from an impact perspective of, are the benefits actually being distributed?
Yeah, it's on the program level, it's also a collage of, I think, many things in terms of knowing whether we're being effective. One is just straight outputs. How many people are we drawing in, numbers that are coming into the program and sustaining through a program? That's one level. And then the financial outcomes. How are we doing reducing debt? How are we doing at increasing savings? How are we doing at improving credit, reducing monthly expenses? And then those things filter back up. If you have success on those, on your outcomes, it's kind of driving our outputs. But I also wanted to just touch base real quickly on one of Heather's points about the client, the married couple, the individual who was managing the finances. That's something that's very important that we see all the time where somebody comes to us in crisis, where one person has the financial knowledge in the family, they get sick, the other person is in, and the family is in crisis, and the family wealth is in crisis for what they've saved. So it was a great point.
Thank you all. So at this point, we can transition to taking some more questions from the audience. If you have not already, I would encourage you, please put your questions in for any of our panelists. One of the first questions we got, Heather, is for you. And I know you mentioned this briefly, but can you talk a bit more about, you work through financial counselors right now. Can you talk about your delivery model for Genivity and potentially ways that you're thinking about expanding the way that you serve consumers?
That's like the $1 million question everyone keeps asking. So we built out our product. We initially built out Genivity well, it was always designed in a consumer-facing way, and we initially did testing out in the market directly to consumers. Our team's expertise is more in the kind of business-to-business approach, and we found that financial coaches and advisors were really desperate for this information. So that's where our starting point has been. But our intention has always been to be able to make sure that no one, like not you, not any of your loved ones, face these risks in retirement around health. And so our goal is to be able to expand this offering through, key partners that can help reach that. And so some of the stuff that we are working on that really help people across wealth levels is helping people make better insurance and HSA decisions. That's a poorly understood thing, what a high deductible health plan can mean to you, and how, if you're more financially fragile, how devastating that can be. If you're maybe of a more mass affluent income level, you have a little bit more money to spend, but you don't have very much wiggle room if something happens. So that could potentially be a good future investment strategy around your health. So what we're trying to do is really take the personalization we're already doing such a great job at from a science perspective, and now bringing in these other areas to help you understand you and your where you are in your financial journey, where you are in your health journey, and then what is the next best step that we can help you take.
Thank you. We have another question for Mike Billnitzer, specifically around the small dollar loan product that your team is offering in the wake of COVID. And I think several of our panelists are either working with a partner to identify financial solutions in the wake of the economic instability that COVID-19 is causing. Are there any initial results in terms of how that is going? Do you have a default rate? Sometimes when we hear zero interest, our ears perk up because it sounds like it's something that realistically it should not work.
Right.
So what are you seeing?
So we are seeing, we literally have just launched, and we're just taking our first pool of clients pulling through in the last week to 2 weeks. So it's too early to see. But so I can't speak to a default rate at this point, but we're assessing based on the needs. We're not holding to tight bank standards or debt to income. This is what's the situation? What's this person's ability to pay back or history of paying back, and the likelihood of them doing so. More importantly, though, financial counseling is absolutely essential, an essential piece of this, because we are trying to solve a problem strategically. We're trying to provide financial capability, knowledge, skills, access to resources. We are not trying to, happy to solve an emergent problem. We're trying to get people as best they can on the income that they have, self-sustainable, and have some tools in their kit to call upon and draw upon.
Right. Anything else that folks would add in terms of early indications of how consumers are responding to some of the products and services right now that are being offered in the wake of COVID?
Well, one of the statistics that we saw very early in our customer base that we're now seeing broadly is that savings rates, even amongst low-income communities, actually have spiked massively across the board since this crisis began. And this has happened in every major recession that I've been able to find data on. So that is something that was really, and so I think it plays, Mike talked a little bit earlier about scarcity, and doesn't mean, of course, every customer has the ability to do that. I'm not claiming that's the case, but I do think it's something really interesting and something that we're trying to think about, especially for new first-time home buyers, is like, can we capitalize on that scarcity mindset to get people into actions that will benefit them even when that scarcity goes away, right? Their jobs come back, they have other things, but if they're currently in the mode of sort of accumulating and sort of hoarding because they don't know what's going to happen in the world, there's just a question of like, can we help guide people into, again, recurring actions over a long period of time? Where I would have thought the data would, suggest that people would just lose all savings, and there are people for whom that's a terrible reality. but there's a lot of people who are sort of taking, even who still have their jobs, who are just spending a lot less. So I think that's just another interesting sort of, for me, was a counterintuitive sort of manifestation of our kind of collective view on financial wellness is very acute right now. Much higher, I think, for most American households than it might be in 3 years, you know, when things start to pick up again.
Yeah, that is, we're seeing the same results across programs through the foundation as well. I'm cognizant that we have 3 minutes left, and there is so much more that we could dig into, but I keep coming back to, and Mike Burshteyn, it was something that you said earlier about focusing on focusing not on changing people, but on changing the context. And I think that has consistently in this conversation been a theme in all of the work that you all are doing, whether we're talking about the health-wealth connection, we're talking about housing stability, we're talking about racial inequity. That has consistently cut across the incredible work that you all are doing and that we're proud to learn about and talk with you about. To close in these last couple minutes, I'd like for each of you, if you can share one word of wisdom for folks that have graciously joined us this afternoon about where you think that the field really needs to be focusing when we're talking about financial health for seniors. And of course, we have just a couple minutes left. Does one of you want to start?
I'll give you 1 or 2 words. You asked for 1 or 2: innovation and collaboration. Theme of this webinar. So those 2 have to go hand in hand. You can't do it alone, and you have to constantly be thinking, how can we do this better?
I will echo that. We cannot do any of this work alone.
I mean, the things that I always feel very strongly about is keeping it simple. I think, especially in the financial services space, we make things so complicated and all this legalese and all this other stuff, and that can just be so overwhelming. And you can do a lot with great design and great experience that can help make it take a more simple approach. And the other part of it is, just because we're talking about serious stuff doesn't mean that you can't inject things like humor or elements of levity where appropriate. And I think that makes things more approachable and a little less scary for people. And so I think we don't have to think of it being the traditional stodgy financial institution approach.
That's great, Heather. I love that.
I could jump in. So I've talked about context enough that I won't mention that again, but I'll say, just be really mindful of inferring intentions from people's actions. A lot of times we assume that people don't engage in programs or services because they don't know about them or because they don't want them. And that's just not the case. Fewer than half of older adults who are eligible for SNAP are enrolled. And many of those millions of people could really benefit. So it's on to policymakers and program designers to design those services for the context of the people that they're trying to support.
Yeah, and I know we're at time, so I'll just say, my view is I love all of what's just been said, and I would say just listen to the customer. It's very easy, to Heather's point, to get heady and complicated, and it's just like, what do they need, and can we meet an immediate need today? And if not, let's focus on what that problem is. And I'll just say my email is Matthew, MATTHEW @EarnUp.com, just because I know we're remote. So if anybody out there wants to reach out after, please do. All right, well, maybe if Aliza's disconnected, I guess we'll just step in and say thank you to everybody who joined. Yeah, it's been a lot of fun, and thank you to my panelists.
Yeah, thank you all.
It's been a pleasure being on with you. Thank you.
Take care.
Thanks, everyone.